You're watching Money9's Daily Market Dose Corporate Central, and we're back. It's the last one on the block on Friday, where we get you the everyday pulse of the corporate world. From all the big headlines to tracking all the fluctuations of the market, we'll get you all the highlights on this show. Let's find out what took place in the corporate world today. New turn in Go First crisis. The Wadia Group, which owns the Go First Airlines, could seek a waiver from the insolvency and bankruptcy code rules that bars promoters from bidding for their own companies because the cash-strapped carrier's account with banks is still marked as standard. Defaulters are prevented from submitting a resolution plan for an insolvent company. The Wadia Group, which owns Go First, is likely to push for a one-time settlement with banks under which creditors will take a substantial haircut. The Wadia Group has not defaulted on payment to creditors till date and hence will not be barred from offering a resolution plan. Experts say that in a way, Go First has shown the way for financially struggling firms on how to protect itself and work on coming back to life. Meanwhile, lessors on Thursday urged DGCA to deregister 23 Go First aircrafts to secure their assets before the insolvency process begins. The moratorium order by the NCLT prohibits institution and continuation of suits and recovery of assets by owners and lessors. Go First has blamed engine manufacturer Pratt & Whitney for its woes and said that recurring defects and non-availability of spare engines resulted in prolonged grounding of its aircrafts and loss of revenue. Adani Transmission is planning to buy back around $100 million of the short-dated US dollar denominated bonds. As per media reports, the company is in talks with some large global banks, including Standard Chartered, to fund the buyback. This news came just a week after Adani Group firm Adani Ports and Special Economic Zone started a buyback program of certain debt securities to partly prepay near-term debt maturities and to convey the comfortable liquidity position of the company. The fresh move is seen as another effort by the Adani Group to bolster investor confidence after the Hindenburg research report in January accused it of accounting fraud and stock manipulation, which led to a sell-off of over $140 billion in its shares and bonds. The Enforcement Directorate on Thursday said that it has frozen assets worth 143 crore rupees of VP Nandakumar, the MD and CEO of prominent Kerala-based NBFC Manappuram Finance, after it conducted raids as part of a money laundering investigation. 6 premises in Thrissur, where the company is headquartered, were covered by the ED during the searches. The assets frozen include 8 bank accounts, investment in listed shares and shares of Manappuram Finance. In addition, various incriminating documents evidencing money laundering and property documents of 60 immovable properties were also seized during the course of search, which was said in a press statement. The ED has claimed that evidence has been recovered regarding money laundering and large-scale cash transactions in the form of public deposits were done by Nandakumar through his proprietary firm Manappuram Agro Farms without the RBI's approval. The deposits were illegally collected by him at various branch offices of Manappuram Finance, which is a public listed company, through some of its employees. When RBI detected the same and directed to return the amount to the depositors, the accused have responded to RBI that they have returned the money to the depositors, but ED investigation revealed that there is no proof of repayment or no KYC of the depositors. Further, 53 crore rupees of deposits are shown to have been returned in cash, but with no proof of repayment or KYC, the statement said. In a development that could aid the resolution of Reliance Capital, the National Company Law Tribunal on Thursday directed Credit Suisse-led bondholders to return the custody of equity shares in Reliance General Insurance Company to the administrator Nageshwara Rao. In yesterday's episode of Corporate Central, we had told you about Credit Suisse, which had written to the administrator of RCAP, Nageshwara Rao, through their lawyers, informing them about their claim for a debt of 660 crore rupees. Credit Suisse wrote to the admin stating that lenders should not proceed in finalizing the resolution until the NCLT decided on this matter, following which the tribunal said that handing over the custody of the shares in the Reliance Capital subsidiary would not alter the security interest of the bondholders. Experts say that this could imply that these bondholders may be entitled to superior treatment over other creditors. Power generation company Coastal Energen, which is undergoing an insolvency process, has attracted interest from a clutch of buyers that include billionaire Anil Agarwal-led Vedanta. As per an ET report, Vedanta, Torrent Power, Jindal Power and Foreign Investment Fund, Dickey Alternative Investment Fund are among 18 companies interested in acquiring Coastal Energen, a power-producing company undergoing an insolvency process. In February last year, the Chennai bench of the National Company Law Tribunal admitted the power producer for corporate insolvency after the promoter and lender failed in their repeated attempts to revive the company. American Tower Corp, the Boston-based tower company, has reported an unrealized loss of nearly $16 million on the optionally convertible debentures issued to it by Vodafone Idea, its biggest customer in India. In a filing with the US Securities and Exchange Commission, ATC said that it recognized unrealized losses of $15.7 million for the Vodafone Idea OCDs held as of March 31st, 2023. According to an ET report, ATC also stated that any unrealized holding gains and losses for the VI OCDs are recorded in other income expenses in its consolidated statements of operations for the quarter that ended March 2023. The OCDs worth 1,600 crore rupees were issued to ATC's India unit, ATC Telecom Infrastructure, in February. The proceeds are being used by VI to clear its dues to the US tower firm, which amounts to around 2,000 crore rupees. However, the VI stock price fell nearly 15% from the time the OCDs were issued in February to the end of March quarter, resulting in ATC's unrealized loss. And in a rare scenario, the National Stock Exchange has delayed publishing its financial results for the quarter and year ending March 2023. The board members of the company have sought time till May 15th for the final publications of the results. While the NSE is yet to give any precise reason for the delay in publishing the results, sources say that the clubbing together of the financial information of NSE's various groups and associated entities was taking more than the usual time due to the financial year ending pressures. On April 21st, a public notice by the NSE declared that its board of directors would be meeting on April 28th to consider and approve annual audited financial results. But the results have not yet been declared. Recently, the NSE said in another announcement that it would issue its financial results on May 15th. Well, that was all about corporates. Over to some market stocks that were in action today and also analyze the reason behind it. Both HDFC Limited and HDFC Bank shares fell more than 5% on May 5th. A decline of more than 80,000 crore rupees has been recorded in the total market cap. This is because of the announcement of Morgan Stanley Composite Index (MSCI), which is related to the merger of these two companies. This is due to the announcement of the same. And also, announcement was made on using an adjustment factor of 0.50 for computing the weightage in the MSCI index of the new company formed after the merger, due to which HDFC Bank stock is expected to be sold for $150 million. Although the market believed that an adjustment factor of 1.0 would be used, which was expected to buy about $3 billion in the stock. It is believed that the rest of the index may also take a similar step, due to which the stock has seen a sharp decline. But analysts believe that long-term investors should buy the stock on the decline because this decline will be limited to a short period only. Two-wheeler company TVS Motors share has touched a new 52-week high of 1,234 rupees 0.95 paise on May 5th. And the reason is the fourth quarter results. The biggest highlight of the result is the company's operating margin, which has crossed 10% mark, whereas the estimate was below 10%. This is the sixth consecutive quarter when the company's margin has crossed 10%. Contrary to the expectation of the margin decline, the company's margins in quarter 4 stood at 10.3% as against 10.1% in the corresponding quarter last year. As the operating profit rose by 22% to 680 crore rupees from 557 crore rupees. During this period, the income has increased by 19.4% from 5,530 crore rupees to 6,605 crore rupees, and the profit has increased by 49% from 275 crore rupees to 410 crore rupees. However, behind the disproportionate increase in the profits is the figure of other income, which has increased from 8 crore rupees to 71 crore rupees year on year. Well, that's all on Corporate Central today. But before we get going over to some important corporate events and triggers which have the potential to make market impacts. On May 5th, results of Britannia, Piramal Enterprises, Marico, Adani Power were released after 3:30 p.m. which have the potential to impact the market. And on the global front, US employment figures for April will be out, and 1.8 lakh new jobs, unemployment rate possible to rise to 3.6%. Also, watch out for Europe's March retail sales figure, which will also be out on May 5th. On May 6th, board meeting on ADF Foods results will be out, and which could lead to a share split. On May 7th, Coal India results will be released. While on Monday, May 8th, watch out for results of UPL, Exide, Pidilite, RT Industries, and also keep an eye on the results of Canara Bank, MGL and Birlasoft. On the same day, DCX Systems 6-month anchor lock-in will also end, and our systems delisting offers last day would be on May 8th. Offer price of delisting is 262 rupees per share. On Monday, Mankind Pharma's IPO will be listed, which was subscribed with a total of 15.3 times. And globally on May 8th, UK markets will remain closed. Well, that's all on today's Corporate Central episode. We'll be back with more new updates next week. Until then, stay tuned to Money9.